to start a week. If you happen to be starting the week this way, I'm talking about the weekly time frame of Bitcoin, of course. And yeah, it's been an interesting start. I won't even call it auspicious because, to be honest, it was relatively expected, especially given the new weekly candle information that we saw already yesterday, and the information that I was telling you on the daily that was very likely to happen this week. And I told you about it yesterday even, and days before that. In fact, yesterday there was some weird thing with the live streams or whatever, so a couple of my videos got stacked one on top of the other, so I told you even more than once. Hopefully you were paying attention. But most importantly, hopefully you were trading the VEPs if you were trading. Hopefully you were trading the VEPs and you saw the drop into the 62 range, the 62K range coming, so that you could take the appropriate action and short it, right? Because that was the obvious move once it began to happen, and you could see it happening given the VEPs information, right? It was clearly marked as we are now, and thus it began. So I sincerely hope that you took advantage of that and didn't just get sideswiped into oblivion because you didn't pay attention and you tried to long when it was actually going down, right? And if you did try to long when it was going down, I really sincerely hope you got out immediately so that you didn't lose anything of significance, because that is the thing you got to learn about risk management, right? It's 3 things you got to do to manage your risk properly, right? The 3 rules of trading. 1, first of all, you got to make sure you take your profits early and often. Number 2 is you got to limit your loss, which means that if you make an entry and it goes against you, you get out as quickly as possible. Right? That's all about risk management and making sure you take profits and making sure that you limit your loss. And number 3 thing is, don't be emotionally attached to your trades. We say that over and over again. Don't be emotionally attached to trade. And I hear people repeating it all over and over again in different places. Good for them. They're learning. I hear people that weren't saying it for too many years starting to say that. We know you're watching. It's okay. We know you're watching alpha trading videos. Good for you. We know you're not talking about it. We get it. You don't want to give up your gig. You don't want to give up your shilling gig. That's fine. And you don't want to talk about the real deal, which is the VEPs. But at least you're giving a third of a head nod by telling you it's trading more. But of course, people will have told you that for many years, right? That's basic stuff, right? But that basic stuff is really stuff they don't teach you, even in technical analysis, in traditional technical analysis world. Simple reason, right? Because they don't want you to have basic skills. And if you know them, they want you to put them out of your mind. They want you to only focus on the absolutely, completely ridiculous voodoo TA, right? Which is what they call, technical analysis really is voodoo TA, if you think about it. Why do I say that? Well, because it is really just a bunch of random witch hunt stuff. Hey, buddy. How you doing, kitty cat? Good cat. It is designed to fail most of the time. You have to learn how to counter trade it most of the time. In other words, you have to do the opposite of what it says. Sometimes, not all the time. Depending on the context, blah, blah, blah. It's a bunch of ludicrous nonsense. Right? If you follow the VEPs, you don't have to do that. If you trade the VEPs, you don't have to do that. What you have to do is actually do what the information tells you. And again, is it Does it happen occasionally that a candle or two will go the other direction than the returns are saying? Yeah, but usually, generally speaking, right, the candles, which are just demonstrating the result or the resulting price action, all they will do, if anything, right, other than randomness, like the vast overwhelming majority of the time, what they will do is actually just follow the returns. Right? So when we saw the price dipping yesterday, look at what happened with the variance and its correlation, and look at what happened with volatility and its correlation. You don't have to be a rocket scientist to see, oh, if volatility is rising, correlation's falling, the price go down, and vice versa. Right? Volatility is falling, correlation's rising, price go down. Right? So in both of those cases, price can go down. Right? There's really only 6 tendencies you need to learn. Right? When correlation and volatility are both going up or both going down, price go up. Right? You gotta learn the 2 about going sideways. Right? So anyway, and you can learn those for free. They're in our trading Discord. We give away a very nice little cheat sheet, which is very handy. Print it out, keep it next to you. I mean, there's really only 6 things to memorize, 6 tendencies to memorize. There's 4 basic given facts that you need to memorize, and 6 tendencies you need to memorize. Just literally 10 little things, right? And the 4 facts are things like, returns mean revert, price doesn't, that kind of stuff. The standard deviation of returns is volatility. The stuff you hear me tell you all the time. But my point is, in all this, that you should not be surprised that Bitcoin started the week off with nice dips. Why do I say that? Again, because if you look at the actual information of the VEPs that happened before it started to fall, what was it setting up for? You can say just to move. Yes, it was setting up for just to move. But look at what it was setting up for on the volatility and the correlation across different lengths on the daily and lower time frames. Are you really going to tell me you're surprised it made a move down? You had fairly high correlations on really low volatility on the daily, right? And you work all the way down to the workflows, get down to 15-minute and lower. Are you really going to tell me you're surprised? Look at the variance, look at the volatility. You're going to tell me you're surprised by what it did? Come on. You should not be surprised, right? You should have exploited that occurrence of opportunity, and I hope you did, right? And I've been telling you this is going to be a nice week for scalps already, Now, where would it have to dip to break the probabilities that we discussed last week about the RMLR? When I told you that starting this Saturday, it would be in mean reversion if it hadn't hit the 3012 third standard deviation band at the downside of the 3012 RMLR. Right? Back then, on that day, it would have had to have been around 60. Right? I think it was 62 on Friday, dropped down to around 60 and change on Saturday. It was 59 something yesterday. And today's like in the low 58s. So we have to drop to like 58.2, something like that, as far as I remember. Right? So 58 and change is where it has to drop to if it's going to break the probability, which is incredibly small. Right? If it breaks that probability, we're talking it's less than 0.03% or 0.3%, less than that. If it actually touches that third band to the downside, which means what you can do is if you are shorting to that area, right now I'm not looking at the screen, so I can't tell you what I'm doing, but if there is a reason to short to that area from where it is now, then you can take your profits before it hits that band relatively comfortably. Like, you don't have to wait for it to hit that band, because it probably won't. in all likelihood. Right? It is, despite the drop, it is still more probable, like well over 99.7%, it is still more probable that it will touch the 3012 RMLR band, which is up in the 70 something K range the last time I looked, than it is to go down and touch that third band to the downside of that 3012 RMLR. And I know you must be thinking, what are you talking about? Well, if you're new to the RMLR, it works amazingly well. What does it let us know? It lets us know the mean, which direction the mean is going. Specifically, the reverse mean of log returns. And we can tell which direction it's going. Well, why do you use that? Well, we use that because it's a very, very efficacious indicator. Imagine having the power of a tool that tells you something about the future incredibly accurately, that you can use to trade and make money, right? It's like having a little printing press in a way. If you know the future direction of the mean or the reverse mean, then you're able to tell when the asset is in distribution mode or is in mean reversion mode. That's all assets ever do, right? In that sense. There's distribution and mean reversion. There's buy pressure, there's sell pressure. There can be buy pressure in distribution and mean reversion. There can be sell pressure in distribution and mean reversion. And distribution and mean reversion can happen up, down, or sideways. There's random walk and there's trending moves. And that's all there is when it comes to the kind of movements that an asset is making. An asset is either moving by a random walk, which is the most common thing that it does most of the time, or an asset can move by a trending move, which it does a relatively small percentage of the time. Right? Somewhere around 20 to 30% of the time, the asset is in a trending move. And when I say the asset, I mean pretty much every asset. Maybe sometimes it's 10% of the time, maybe it depends on the asset. But generally speaking, around 20% of the time, assets are in trending. The rest of the time, they're random. And you can look at that on any time frame and you'll find that. It's not just a coincidence. It's math. How do we measure the trending moves? Well, we use entropy because it works really well. How do you measure your entropy? Well, there's a few ways to do it. We use some ways to do it that are very handy. There's really more than a few ways to do it, but we use a couple of tools, or a few tools even, that are very powerful at doing that. I think we have about 4 or 5 different entropy tools, maybe more. Most of them are baked into one indicator. Another one is a standalone oscillator, which is very good also for spotting divs and divergences, called the entropy oscillator. Incredibly good for scalps. But there's also the returns oscillator, which is really how we do that most of the time, for the very simple reason that that is without a doubt the primary divergence indicator that we have of all the different tools we have used for spotting divergences. That one is very effective, very reliable. I mean, they're all effective and reliable, but that one tells you the divergences that really tend to matter the most, especially if you're looking for a slightly longer play. You know, if you want to stay in the move, maybe a few minutes longer, a few candles longer, whatever. Returns oscillators are very good, especially if you line it up with other indicators. You know, like if you're looking at the AVQ, or if it lines up with the ALR, if it lines up with the entropy oscillator, or the PP2 or the RMLRs. There's a number of different ways you can line it up to see whether or not the obviously the volatility itself, yeah, and the entropy itself. And then when you line it up and you see, oh yeah, there's a confluence here that shows you there's a divergence and there's a big move about to happen, because let's say the volatility is fully contracted and the correlation is fully expanded. So there's likely to be a sizable move here, right? And you look at the volatility quality, and you see it's ready to make a move. It's about to break through the moving average, to one direction or the other, right? To the downside or whatever. And it's tight. It's about to expand. Okay. Meaning the bands are on the AVQ are tight and about to expand. So we put those things together. You'll probably also find something like entropy might be super expanded or super contracted. It might be on a fully trending move or a fully random walk. Right, in which case it's likely to flip towards the other direction. Or it's possible that it will. And then you look at the correlation of it, and you see whether or not the correlation of the entropy is about to break or continue. Whether it's about to expand or contract, whether it's positive or negative, etc. When you do that, you will find that the moves that you get with those VEPS tools are incredibly powerful. Now, why am I telling you all this? Right? What difference does it make? Especially if you're not actually trading the VEPS. Well, the difference it makes is that you might be new to this, right? Or you might not have traded with the VEPS yet. Maybe you haven't figured out how to use the tools that you have access to. If you don't have the tools yet, you can get them for free. The basic volatility starter package. We give you a volatility tool, a correlation tool, a laser returns tool, or like a returns oscillator tool, and a free alpha volatility quality tool. We give that to you so that you can learn for free with all the educational videos we have, educational documents, plenty of channels full of information, cheat sheets. You can chat with traders who are real people, who are real traders, not just like people we hire to be mobs or something like that. They're actual traders. They use our tools. You can chat with us, the co-founders. You can join our live streams. Like, we're not in it to sell indicators to 100,000 people. We're really not. So that's not our model. The YouTube Jimmies of the world, that is literally their model. Right? That's how they run their day-to-day. Is they're just looking for subs. They're not spending time actually trading. They're spending time drawing art on charts and not actually trading, just looking for subscribers. They want people to join their channel, to subscribe to their channel, to buy their courses, to buy their tools, and all that stuff. To join their Discord, to pay for the VIP access to various channels, like expensive access. With us, even our Discord is basically free. You can get access to pretty much all the channels almost for free. The only channels that you don't get access to, unless you join our paid subscribers group, are a few select, well, more than a few, but channels related to the indicators that you don't have access to. Once you subscribe to those indicators, you get access to those indicator channels. Everything on our Discord apart from that is free, including access to the channels about the indicators that you get for free. Right? The whole thing is basically free. Right? We want people to join and to learn a better way to trade. So, we don't really care if you want to come in and just take our tools and buy them. We're not interested. In fact, we'll tell you no. I mean, it happens all the time. People come in, get all excited. Hey, can I buy your indicators? Or even, hey, can I have your 2-week free trial? Without ever having tried the free stuff. And they don't know how to trade volatility. We tell them no. We tell them, here, try the free stuff. You can have access to the free stuff forever. We're not going to ever charge you for it. It's free. As long as you're in the Discord, you get to keep those indicators. You don't have to be actively online, but I mean, as long as you're part of the Discord and you haven't quit the Discord or something, then you can get keep access to those tools. And we will never ask you to pay for the tools. Like, ask anybody in our Discord. We don't nudge them to buy it. We don't care. We're a very, very small community for a reason. Most people don't want to learn this stuff, and we're okay with that. Like, you want to come and learn, see why it is that we can make such accurate, predictions about price levels on any given day, or even long-term forecasts. You can come and learn. You can come figure it out for yourself. You can come see why. You want to come and see for yourself, the fact that we don't shill to our members and tell them to buy. Like once a year we offer, I think it's once a year, like basically Black Friday, holiday season. There's one time a year when we'll offer like a sale on our indicators. That's it. And that's only it's really, again, we don't offer it to anyone. I mean, yeah, anyone technically can buy it, but you really can't buy it if you don't know how to use the volatility starter kit. Like, it's not available to you. We will only make that set of tools available to people who actually know how to use the volatility indicators. So, and we don't shill affiliate links. We don't shill links to exchanges. We don't shill links even to buy wallets. We won't give you affiliate links to buy hardware wallets. And we're telling you, get hardware wallets. We're telling you, if you're going to trade, use various exchanges, that are good for you. We're not going to recommend a link to you with an affiliate link on it. If we'll tell you a URL, we'll just tell you the URL. We're not going to try to make a penny off of you, or $1 off of you, or a Bitcoin off of you, just to tell you a link. This is not how we operate. Maybe we should, right? People say, well, why don't you? That's really stupid, blah, blah, blah. Well, we don't believe in that. We are sick and tired of seeing people getting wrecked, who are basically victims of YouTube Jimmies scamming them with either terrible products or terrible information, or both. And or sometimes they give them links to companies that seem fine and legit that later turn out not to be good. For example, look at all the YouTube Jimmies that were shilling FTX for years, right? For like 2-3 years they were shilling FTX. And then one day FTX went bust. And all those people who shilled all those people to go into, all those YouTube Jimmies who shilled all those millions of people to go to FTX, suddenly were responsible for bankrupting millions of people, or however many people got bankrupted by that. Not cool, right? So we'd rather not do that. And FTX may be, the most notorious one in the last few years, but they're certainly not the first exchange that went belly up, and they're not the last that is going to have problems, right? Just a few days ago we saw another exchange having problems. Kraken, in case you're wondering. They didn't get hacked or anything. Well, they are hacked, but they didn't get their money stolen because it was a quote-unquote white hat. They got $3 million, though, stolen of their own money, of the company's money, not the investors' money, not the traders' money, but still, $3 million is $3 million. And now they have to, do an investigation into the company, and they know who did it, because the people that did it tried to get, more money out of them, basically. He said, hey, let's talk before we give you your money back. Let's see if we can do other business. Other business. So, and Kraken is a quote-unquote respectable exchange. It's considered a very secure exchange. It's considered very well run. It's considered, it follows all the rules. It complies with everything. Right? Last year, earlier this year, when they were sued about having some kind of tokens on there that the government didn't like, the government told them, hey, we're going to sue you, to take that stuff down. They basically said, no, we'll just take it down. Don't worry about it. They just took it down. They complied. Good little boys and girls. But, as the saying goes. They're good little boys. They didn't want to argue with the man. So they just got out of those tokens. And that's considered a reputable exchange in the crypto space. And they had hacking problems. Binance was considered reputable, except for within the U.S. Obviously, the U.S. has long had problems with them. But even Binance split their operations into two. So it was Binance, .com for the whole world except for the United States. Then they had Binance US they created just for the US to satisfy regulators and let it be monitored and all that stuff. Right? And even they ended up having problems. And even they had their founder end up going to prison for a few months, which he's there right now, as far as I know. For a few months. So, beware. Like, well, you think just because you use Coinbase, it's never going to have problems? Coinbase is rife with problems. Right? It's very common that you can't use their exchange because it will lock up, it'll freeze up, even if it doesn't get hacked. There's no central exchange is impervious to 100% of all hacking attacks. There's always a loophole. It's just a question of whether or not and when the hackers find it and what do they do with that loophole. And the reason there's so many vectors of vulnerability and vectors of attack on these centralized exchanges is because they're centralized exchanges. So they have single points of failure. And when you have a single point of failure, it is more vulnerable to attack. And so hackers know how to look for vulnerabilities at those single points of failure. And many other places, but especially those. So, anyway, I mentioned this stuff to you so that you do not do foolish things like follow affiliate links and only go to sites that you've actually done some research about, or that somebody that you trust, like actually trust, has told you, yeah, I can verify this is okay, and then you go and Google it for yourself. You should always do your own research, no matter what, especially in crypto, especially when it deals with anything to do with your money. And crypto is definitely money, right? Like, if you're putting money into something, it's money to you. If you're buying Litecoin or Bitcoin or Shitecoin, I don't care what it is, right? You're buying anything. Doge, Shiba, whatever, Solana, it doesn't matter. ETH, it's money if you're putting money into it. So never do that kind of stuff without knowing what you're doing in terms of research. Don't kid yourself. Know how to look up valuable, authoritative sources. Understand that alpha trading is not shilling you anything, right? We're giving you free, unfettered, neutral, objective, unbiased answers to information that we know, right? And if our information ever changes, we make sure we change it and we let everybody know. But information about how to trade the VEPs doesn't, quote unquote, change in the sense of like how to read volatility and correlation or entropy and correlation. That doesn't change. The tendencies are the tendencies. There's nothing you change about that. How to read probabilities and statistics doesn't change. The only thing that would change about that is using different models. Right? But knowing how to read a volatility percentage is knowing how to read a volatility percentage. Can you read? Great, then you can read the volatility percentage. Can you see a dot on the screen and understand what it represents? Yeah, if you can learn that, then you can read probability percentages, right? And you can understand statistics, even without having to calculate them yourself. So I highly recommend that. I highly recommend that you learn how to read the VEPs, and that you actually learn how to take action according to what the VEPs actually tells you to do. Because that is the key to trading the VEPs properly. Okay, that's it for now. Happy Bitcoin trading, folks. See you later.